Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. My hair is wild today, just like the market. So we have been anticipating and waiting for Jerome Powell to talk at Jackson Hole. So that happened at 10 a.m. this morning. We got some information on inflation at 8:30 in the morning, and the market has been selling off ever since Powell spoke. So I'm going to bring this up. Anyway, before I get into that, we made $435 today. So that's back-to-back days over $400. Really nice rebound after a bad day there in the middle of the week. So that's great to see. But let's take a look at the markets and what the daily chart looks like. This is the SPY. I always look at the daily chart. Now, when I'm looking at the daily chart on the SPY, I put in my daily settings, which are the 50 moving average, the 200 moving average, and whatever technical analysis I see. So we have this downtrend line, all very easy to figure out. So the last time we hit this trend line, we sold off pretty drastically. Hit the trend line here, and it happened to coincide with the 200-day moving average. Also have been selling off pretty drastically. So what do I see here? I see a market that broke above the 20 EMA, but on very light volume, and is now selling off on much higher volume. So that means that the big money, the institutional investors, are contributing to a distribution day. So distribution days, the more you rack up, and that is basically the definition is a market that is down 0.2% or more on heavier volume than the day before. The more distribution days that you start to rack up, we had two over here, we had another one over here. It suggests that the people that were in these trades and made money from the bottom here were starting to unload positions. It started to happen back here on the 19th, the 20th, and continued here today. So the market obviously is looking pretty weak going into the weekend. Now, anything can happen, but these big red days are usually followed by some more weakness. And the fact that we broke pretty key levels, we had a key level at 410, we had one at 415, 417. We most of the time will now search out that 50 EMA. I do see, just by looking here at the charts, I see right here that might be support. Couldn't get it over here, had support here. Let me zoom in. A bunch of days here where we saw some demand, and then it was resistance, and then it's support, resistance, support. You get the point. So that right there at around 406, it has the possibility of bouncing. But that's a really bearish candle there on the daily chart. And then the weekly chart does not get much better. All right. So on the weekly chart, you can see this 406 area is kind of, a key area, but I'm going to just get rid of that for the time being. These candles here, when it hit the trend line, look very similar to what we're seeing now. We broke under the 20 EMA back here, and now we're breaking under the 20 EMA right there. When we do break under the 20, there's usually some much more room to the downside. I'm not saying that we have to retest lows, but I'm just stating a very obvious situation here. We were overbought and now we're starting to pull on back. Does that mean that the market's got to crash? No, but the thoughts today were don't fight the Fed. And you can just see in the trading day, don't fight the Fed definitely worked. The Fed speech was very hawkish. The pivot that we saw a month ago out of Powell's speech just continued to the rally. And then today we saw a total different Powell, more hawkish, need to keep the foot on the gas, and the market did not have that priced in. And that's why we're seeing markets that are down over 2%. The S&P 500 is down more than 2.5%. This is pretty big. So on the Russell, I want to just show you guys here. Why is 1910 a key area? Why is 1910 a spot that seems to be support for quite a while, over a week, this 1910. So if we go here and type in the IWM, which is the ETF for what I'm trading, we can see that this is that area of support. This 190 area has been support right here, resistance, resistance. On the daily chart, you can see it even clearer. Came right back down to it after we broke out, have now been bouncing around there, and we're sitting right on that right now. If that breaks, then you have all the small caps are going to be selling off even more, and then you have the 50-day right down there. So we're currently at support on the IWM, so there's no reason for me to take any more trades right now. So we're going to end here at $435. So hopefully you guys enjoyed the video. Hit the thumbs up, and I'll see you back over the weekend for our weekly watch list video. Take care.